Hello, everyone. Welcome to this week's episode of Commission Breath. Brandon Love here with Tom Moffat and special guest today, Jacob Perez. Jacob is a partner at Synergy Mortgage, and he has a unique angle of predominantly having a B2C business, so not having a ton of realtor partners. He has a fantastic book of business and a team of agents under him, so we're super stoked to have you today, Jacob. Thanks for joining us.
Thanks for having me, guys.
Yeah, Jacob, you and I, we go back probably about 5 years ago. We connected and we've been following each other on social. And I always admire the fact that you kind of just went against the grain with the typical, like, reach out to realtors, book meetings, get your business through that way, which we're big advocates for. But I like how you carved your own niche and just went straight B2C and really established a brand in the real estate investing community. So that's why we invited you on today. And maybe you can give listeners a brief background as to how you kind of got here and where you're going.
Sure. Pretty long journey, so I'll try to keep it short and succinct for everybody. So I've been a mortgage agent about 8 years now. Prior to being a mortgage agent, I was typical business grad, just kind of job hopping, trying to make a bit of money. I didn't really know what I wanted to do. The only thing I knew I wanted to do is I wanted to invest in real estate. I heard that concept when I was in high school that you just have to put a down payment down and have a tenant pay off the mortgage. And then you have, the value of this house paid off. And I always thought that that's the easiest thing I've ever heard. And I don't know why everyone's not doing that. So that was kind of a goal of mine when I got out of school. So I started doing some marketing at one company, saving up some money. Then I moved to a government role and eventually did a master's. I was doing consulting in Toronto. And as I was kind of doing all these jobs, I started picking up properties. I eventually had like 5 or 6 rental properties. And I was still trying to figure out what I wanted to do with my career. And I remember I got an interview for like an amazing job. The base salary online said like 200,000. And I was like, I've never even made 100,000. So it would be crazy if I land this job. And I went through 8 rounds of interviews and I didn't end up getting the job. And they just told me, you know what, I'm just not experienced enough, which I knew I wasn't experienced enough, but I kept winning the interview round. So I kept going in the process. And after doing 8 interviews over like a month and a half to not get a job, that's just when I was done trying to work for anybody ever, basically. My brother was a mortgage agent at the time. He had just started. I asked him, hey, how much did you make in your first year? He said, oh, around 90,000. And I just figured if he could do 90, I could probably do 150 or something like that. So I got my license and then just hit the ground running from there.
Sweet, man.
It's funny you say that. Like, I know, like, Tom got his license before me, and he was firefighting and doing mortgages, and he mentioned something about how much he was earning, and I was like, fuck, like, I'm just grinding here, and like, he's making double the amount, like, doing 2 jobs. So fuck this. I had a similar mindset, and it's funny, like, we paced with each other for like years, competing against one another until we finally ended up merging forces. But it's good to have that person to use as like your motivator. Like, if they're doing it, surely I can figure this out.
Yeah.
So you dove into investment properties before you even got into the mortgage game. Like, did you have, because this is going back, you said 7 years, right? At the time?
Well, at this stage of the game, I'm 35 now. I bought my first property just before I turned 23. So,
Yeah.
a decade at
Yeah.
this stage.
So they were probably cash flowing pretty good back in the day.
You'd be surprised, because I didn't really know what I was doing. So I wasn't making the best decisions, right? Like my first thing I wanted to do is I wanted to buy a multi-unit for cash flow specifically. And then, I didn't have a buying realtor. I didn't have a proper pre-approval. I thought I knew what I was doing. I didn't really know what I was doing. Anyways, I walked through a bunch of multis. I was scared of the tenants and just, I never walked through houses that dirty in my life. I was clearly didn't come from, that type of lifestyle. And I ended up buying a condo as my first purchase, which lost a bit of money every month. And then I bought a house after, which made a couple $100 every month. But, the market was a lot different back then. So, everything I did ended up being pretty good.
Because now, fast forward, correct me if I'm wrong, I think you're like 100 plus doors or something crazy, right? Like,
Yeah. Yeah, it sounds kind of crazy, but the main thing was, so right now, yeah, I have a little over 100 rental units. It really has just been a progressive growing every single year kind of thing. I think I've only sold 2 properties at this point since I've been buying. So it's just a progression, right? And I'm still learning a lot about real estate investing nowadays, things that I just didn't know when I first got into it, and expenses that I didn't expect and things like that. So yeah, now I don't really buy too many single family. I don't do any more duplex conversions. I don't do anything like that. Now it's just mainly apartment buildings or development kind of thing.
Nice. With that, has it been tough building out your investment property portfolio while managing your book and your team? Like, how has that been doing that alongside each other?
I've always kind of said, 90% of my time goes towards the mortgage business and maybe 10% of the time goes towards investing. Okay. Like investing in real estate is not something you need a lot of time to do. And if you think you need a lot of time, there's something wrong with your approach because it really doesn't take much. You can buy 3 duplexes or 3 single families and do 3 duplex conversions simultaneously at the same time while running a full mortgage business, like in your sleep.
And you're doing the active part too? Like you're an active partner in a lot of these projects. You're not just passive.
No, active, right? And again, at the end of the day, like when it comes to investing in real estate, it's really just you hire out, right? So you got to buy something where the profit model is large enough where you can afford to pay a contractor versus, being a GC, where you can afford to bring in a property management company versus managing the units yourself, right? There's going to be some things that, especially as a mortgage agent, you start looking at your cost per hour ends up getting pretty high the more successful you are, right? So in terms of real estate, I don't manage anything. I have like 7 or 8 property management companies depending on the different locations of the properties. So really all I do nowadays is manage the management company, verify the bank accounts, all that, make sure there's float and everything. Priority has always been the mortgage business.
Nice. That's awesome. And how much of your time do you find you're allocating towards the team building and growth side of things? Because Synergy's cooking with quite a few agents.
So I'll tell you a bit about, I guess, our team model, right? So the way it's always run is like I have an individual book of business. My brother has an individual book of business, and our other partner, Greg, has an individual book of business. And we share the cost of our resources, right? So at any given time, we could be running with 4 full-time underwriters supporting our file down to 2 full-time underwriters supporting our files, potentially just depending on the cycle we're in. We've had a lot of people start working for us in a salary position and move to the agent role. So sometimes there's, some turnover there specifically. But yeah, the focus is mainly just on that book of business. In terms of growing agents of the brokerage, in the beginning, we were definitely trying to grow it like crazy. And now I think we're just trying to grow it a little more methodically kind of thing. I think, if you're a brokerage owner, where to find agents is really easy. There's a ton of them out there. I think it's really determining what are the best types of agents to have in your brokerage, who's going to add to the culture. Because I think, what's more important than what does the brokerage give the agents? It's really just the culture amongst all the agents. You want all the agents to be able to pick up the phone, call another person, hash out a deal, pick up the phone and say, hey, I'm talking to this lead. He said he was talking to you first. Here's what's going on. You just want a good culture of people. So that's why we've kind of slowed it down a little bit to make sure that we're just following our values there.
Nice. That's awesome.
Yeah, I couldn't agree more. I think going to your maybe like multifam conferences and your real estate investor meetups, I would imagine that would be a good source of connecting with other agents and bringing them on. I think your team's mostly real estate investor niche.
It's funny, right? Because as mortgage agent, right, you have referral partners that are great. And sometimes you have these clients who are these massive advocates for your business. And sometimes you have clients who refer you more people than the actual realtors or centers of influence and things like that. And for me, one problem I've been running into is all my biggest referring sources of clients, like all my clients who refer me so many people, are all becoming mortgage agents. So it's kind of like, okay, I have to basically bring them in the mortgage brokerage, right? So I can at least maintain some drip of profitability off them because all those amazing leads I was getting are going to be going to them moving forward.
Well, that just means you're doing something good.
I get at least 6 or 7 of my clients who I've transitioned to agents at our brokerage.
That's hilarious.
It's a great way to like bring them in and then you show them the other side behind the curtain and they're like, holy shit, like I should have done this way earlier, I'm sure.
Well, you're seeing deals funding and last names that you used to work with. And you're like, oh, yeah, I remember that guy.
Well, it means you did something good during the process, or like the fact that they looked up and like, hey, you know what? I kind of want to do what Jacob's doing here. Like, yeah, you obviously have a good process there with clients. And speaking of that, I don't know if you mentioned this off air or not, but you mentioned you have 45% roughly of your leads are coming from past clients.
Mm-hmm.
Damn.
Yeah.
That's awesome.
Yeah. So here's the thing, right? If you have a mortgage business, you might want to choose a niche, try to market to a specific niche, right? I'm a big believer of if you're going to market or choose some kind of niche, it has to be true to you, right? So that's why I did real estate investing. I wasn't trying to pursue real estate investors because I thought that was the ideal type of mortgage client. It was just something I was genuinely interested in. It was part of my DNA. So it was kind of a natural fit. Now, through focusing on this niche, you realize a lot of the benefits or the cons of some people in this niche. So when it comes to real estate investors, they're usually consistently buying and consistently refinancing, right? So for a mortgage agent, that's an amazing type of client. And that's probably one of the reasons I have so many past clients coming back to me. It's maybe not necessarily that I have the best database, marketing systems, and things of that nature. It's just the nature of the type of client is going to be more recurring, right, than your typical first-time buyer, move-up buyer, those types of people. The other thing about the niche that's really nice too is that probably the least rate sensitive niche of clients that you can be working with is the real estate investors. Probably the clients where, in a funny way, they have the least options. So the least options a client has, the easier it is to fund the deal with that client because they have less chances to essentially find a better option than you, right? So yeah, learned a lot about, I guess, this niche just by working with a lot of them.
Nice. Super sticky. You have their whole past history of files too. So you're like, okay, it's not like starting from scratch. If you move someone with a lot of doors to a new broker, it's a pain in the ass for them to reset up.
Yeah, that's a good point.
Your rate or bring it to a different option that way.
Yeah, I think like what you do well too is you're invested in like your brand within the real estate investing niche, which probably helps retain those clients to coming back to you because you're shown as an expert. Like you do a lot of conferences and speak at conferences, don't you?
Yeah, absolutely. So when I first started, I think we were talking a bit off air about it, is like a lot of the advice that you get out there is to go talk to real estate agents. And I certainly did a lot of that. And I made a lot of friends, but it didn't necessarily translate into a ton of real estate deals or mortgage deals to work on, right? And where I always found way more success was doing the business to consumer route. So what I've done is I've gone through a few niches. So it started with writing articles on LinkedIn about real estate investing, about consumers, things that are happening to kind of position myself a little bit as an expert. Then I would even do things like going into forums and just answering as many real estate investing questions as I possibly could, trying to get those answers to the questions to phone calls, to then connecting them to doing a mortgage with me. I think in my first deal, I pulled 27 closings off one forum. Just answering questions and scooping up clients. So that was like really what got me my first initial boost. And one of the reasons I really avoided the realtors was because when I first started, I got a desk in an office with 4 really high producing mortgage agents in Hamilton. And every real estate agent I kind of knew was working with one of those 4. So it was kind of like I couldn't step on anyone's toes in my office anyways. So I needed to find a bit of a different route. So the more I put myself out there, the more opportunities to speak came up. The small opportunities eventually grow into bigger opportunities. And, what better place to be than stand in front of 100 people, 200 people who are your exact niche you're trying to market to. Yeah, that's really just been how I've grown the book.
Yeah. So from there, I know you did more of the podcast guesting. So you did the forums, you did the LinkedIn articles. And from there, you went to conferences and then you sprinkled in some podcast guesting. So could you talk a bit about that? And do you still do that as part of your lead gen activity?
It's kind of like this, right? The bigger your book grows, the further you get away from your lead generation activities naturally, right? It's not the way you should run your book, but it kind of just is the way it is, right? So in terms of trying to get myself on a bunch of podcasts, I'm not doing it as much as I used to. One of the big reasons why is right now, like at this stage, I funded personally well over 1,000 deals. Okay. So if I funded over 1,000 deals, that means I have at least 4,000 leads probably who have hit my CRM. And right now, the highest use of my time is just looking at my CRM and finding interest savings opportunities. There's nothing I can do better than that right now because I could generate a mortgage deal a day easily if I just focus on that one thing. So as of right now, I'm not doing as much as the podcast touring, but I will probably pick that up again now just because I have a lot newer stuff to talk about that I think is going to be a lot more relevant for people.
And you're probably going to dive more into the commercial side of things, right? Like given how the landscape has changed in Canada with investors.
Yep, definitely. So that's been one part of our business. And this is the other thing too, is like, if you're going to niche with investors, it's funny because it puts a natural pressure on yourself that you kind of got to keep buying property because like people want to know, what do you own? What are you doing? And that stuff actually like really matters to people. So what we've kind of done was we had all these clients we were helping scale from like 1 to 5, 1 to 10 properties between, everything from single family to fourplex. And eventually those people were graduating into the larger stuff, apartment buildings, things like that. So that's where we kind of pivoted our business, right? I learned from some more experienced brokers who were doing my deals when I was seeking them, when I was buying apartments and stuff like that. And eventually we kind of learned the whole CMHC and MLI Select business from scratch. So now that's a big part of our operation, is really holding people's hands to getting into their first apartment building and things like that. And the good thing too is that it's just another value add. So now all of a sudden, with all these agents at our brokerage, they can refer us deals, get a nice referral split on commercial deals, and know that the person they refer to is not going to try to steal their residential business, not going to try to steal other things from them in the future. But it's a good thing, the commercial, because now you can be a resource for clients, you can be a resource for realtors, you can also be a resource for a lot of mortgage agents out there who just don't do that type of business.
Yeah, that's awesome. We were at Dustin Woodhouse's event in Whistler the other day, and he had a guy speak who had gone from like 100 million book, and then he transitioned completely to the commercial space. He was talking about some of the pros and cons that he experienced, and he was in Quebec. So I'm curious, can you touch on sort of your learning experience and what that looks like for people who might be considering branching out into that realm?
So I would say this is the first thing I always tell people who want to learn commercial, right? Is you have to be willing to sacrifice your reputation if you want to grow this new segment of your business. If you're used to, hey, I have this perfect customer journey that I execute on res every single time, and it's smooth and it's flawless with the exception of some things I can't control, you're not going to have that when you start on the commercial side. So just be okay with it. Don't think you're going to have it all set up and you're just going to be running. It just will not work that way. You need to experience things. And the other thing too is that there's so many different layers to a commercial deal than there is with a res deal. So there's so many different points where there could be hiccups in the file, right? But if you're looking to make the transition, I'd say you have to be willing to sacrifice your reputation a little bit. If you really want to be careful and safe and protect your clients and yourself, focus simply on refinances and just stay away from purchases, because with purchases come condition of finance, come closings, and open yourself up for a little bit of liability should you be steering the ship and this thing goes wrong. Right? So this is commercial. Okay. The document process is a lot more extensive than the document process on the residential side. The actual underwriting piece, I would say, is way easier, way faster than a res deal. Not even close. The submission process, the funding process, all that stuff is way slower kind of thing. So when it comes to commercial, a lot of things are different than on the res side. So on the commercial side, if you're deal is massive, if it's $100 million, all the banks want your deal. Whereas on the res side, you have things like sliding scale, and then the qualification becomes harder and all that. In commercial, it's almost the opposite. The bigger the deal, the qualification actually becomes a little bit easier in a lot of ways. With commercial, what you'll find is that you're always going to probably earn a good commission on a commercial deal. Whereas on the res deals, you're doing a lot of bank to the same bank refinance. Maybe you're in a situation where you have to do a buy down. Maybe you're in a situation where, you're fighting to save the deal. You're never going to really have a situation on the commercial side where it's the week of closing and they go, hey, RBC offered me 0.2 less, so I'm going there. That will never happen on the commercial side. So that's the big win there. But I have a deal that I worked on for 6 months. There's over 300 emails between the clients and I. Now the deal's not funding. That's a lot of time for nothing, right? The benefit of commercial is you do have the opportunity to do a $10 million deal. You can make $100,000 in one deal,
right?
If you wanted, right? You're not going to ever get that on the res side. So I think for me, the main reason I chose commercial was really number one reason was just put a fence around my clients so I never have to refer them out to anybody. I don't ever want the client to get out of our orbit. So doing the commercial business was part of that, but also, I had a lot of interest in it too.
That's a good call. And everything comes down to that service ratio on the commercial side anyways, right? That's why the underwriting is pretty straightforward. As long as the numbers make sense, the banks are willing to pursue it.
Yeah. And sometimes it's not even debt coverage ratio. Sometimes it's just the upside of the building, right? So let's say, for example, you can get a mortgage where it totally doesn't debt cover, right? But there's enough upside in the building where, they're willing to take on a bit more of a risk, right? On commercial side, you don't have necessarily the same true privates like on the A side. On the A side, a private will say, hey, I'll do 50% LTV anywhere. I don't care. right? Whereas on the commercial side, the privates are still underwriting things like pretty complexly. So you just need to understand the deals. You need to understand what documents you need to collect. And, like we said, right? What's the biggest bottleneck in funding deals? It's usually collecting documents from the clients. And that's probably the biggest challenge, I would say, on the commercial side.
We just learned last week that the commercial side, there isn't even like a submission platform. Like it's all like email and Excel spreadsheets and stuff. Like it's still pretty archaic from what we gathered, which is
Well,
not.
I mean, so, I've been invited to a bunch of these, whether it's lender trips and stuff like that. And some things I've said to these banks that have blown my mind is that you come and solicit residential business from us all the time. And you've never once brought up that you have a whole commercial department to your business. And had you brought that up one time in 2016, we would have funded like 50 million with you by now on that side.
Because you were just probably referring them out, right?
We would say, hey, what's your client book like? We would be like, oh, it's like 90% real estate investors. They never think like, hey, we have this actually amazing program that funds apartment buildings. Maybe this is, they just never, right? There's not a lot of cohesion between those departments. But
right. They're just separate.
The cool thing about commercial is like, it's what you would think brokering is, right? It's making contacts at the banks, actually genuinely brokering the deal, not like, hey, I'm submitting through Filogic, Scarlet Velocity, and, just checking the box through like a secured portal or something like that. So yeah, it's a lot of, you got to find the right contacts at those banks so that you can get these deals funded.
Very relationship based on the residential side, but I would probably say even more so on the commercial side with the lender side too.
Yeah, at the end of the day, like everyone's working to try to get your deal funded. It's a lot different. Like on the residential side, we all have those banks or those underwriters at those banks who we just have that feeling that they want to decline the file. They want a reason to decline the file. Yeah. You don't get that feeling very much on the commercial side. They're trying to figure out, how can the deal work?
That's cool. In a perfect world, would you be fully commercial at some point?
I would say no. No, I still like the res business. I don't see any reason why we wouldn't be heavily involved in that. I'll still say like my number one favorite transaction always has been, probably always will be, is just debt consolidation. Just simply doing a debt consolidation. It's such a big win for the client and it's such a life changer for them. That is so much more satisfying and I'm so much happier for the client. I'm so much more proud of myself doing that than someone buying their fifth duplex. Like that stuff is all amazing and I support that too. But just like consolidating someone's debt and like letting them breathe again, to me is like the best type of transaction.
We're both smiling because we literally just had, I don't know how long ago, but we had an episode going over like our favorite files. And that is by far my personal favorite, is debt consolidation, whether it's A or B side. Clients are super happy. You're oftentimes not getting shopped around too much because they're just so happy that the cash flow is there for them.
Mm-hmm. Yeah. And in the economy, it just matters more and more.
Exactly. And you feel like less of like a cog in a machine. You're like, hey, I actually made a meaningful difference on someone's family and their life in general. Versus like, it feels good to help someone get their first home, or like any of the other files. It all feels good, but that one feels especially great when it happens.
Yeah, absolutely. The res book's not going anywhere. Definitely going to keep growing that book. I have a lot of ideas right now. I'm not going to put out publicly that I'm going to do to try to blow that one up this year. And then the commercial side, we'll see. We're going to keep growing that book too. But what we're trying to identify right now on the commercial side is like, what are the different roles you want, right? Because on the residential side, generally it's like you have a full service underwriter or you have like a doc intake and a submission person. There's a few different models you can run it that are pretty clearly out there. On the commercial side, we're figuring out what are those ideal roles to have on the team, just so we can figure out what's the most efficient way we can move.
Yeah, nice. That makes sense. We're figuring out the same thing for our own book too, like structuring our team, and whether we have one underwriter, one sales point of contact, or if we have like one person that does both. There's so many ways you can skin a cat in this business, which is the cool part. It gets us excited. With the real estate investor community, like there's obviously been a big shift in maybe like the last 2 to 3 years with, not finding as many deals as you once would have, say, 5 years ago. And there's been a big push that I've seen for investors flocking to the States. Are you seeing the same? Or like, obviously there's still deals out there, but do you find it very tough for investors right now in Canada?
I mean, it's definitely tougher. So, as you mentioned the last couple of years. So, well, what happened in the last couple of years? Well, interest rates went up significantly. You had all these borrowers who have 4, 5, 6, 7, 8 properties on incomes of $50,000 to $90,000 a year. And now they've gone from cash flowing to losing money on all these different properties every month. So what's that done? One, it has them in survival mode, not acquisition mode, because they're trying to just keep all these properties afloat. The second thing is their borrowing power has been shot, because it's one thing if your mortgage payment went up $400. It's a different thing if 5 properties mortgage payments went up $400. So you're just seeing all these investors in Ontario and Canada, they went from acquisition mode to just trying to stabilize and stay afloat, right? In terms of seeing people look down south, I think there's no shortage of people exploring opportunities down south. I don't know how many people are actually moving forward and scaling opportunities down south. I think that number is a lot less. And then you're seeing people just go across Canada, right? You're seeing Alberta has become basically the hottest province in the country. Edmonton and Calgary were like the only markets that actually went up in price throughout this big decline. Then you have the other smaller provinces, New Brunswick, Nova Scotia, places like that, which always kind of had a consistent interest. But we're seeing a lot more of clients jump into the apartment building space, the CMHC space, as their latest pivot, because that's not requiring the same checkpoints for borrowing power that they're required to do something on the A side kind of thing.
Interesting. Okay. So you're kind of niching into that CMHC program and just really sharing the benefit and borrowing power it has for them to scale their business. Are they coming to you with this idea? Or are you guiding them and having them sort of lean into that strategy?
It's a little bit of both, right? So some people have heard about the program, they get referred to us. Some people have heard about the program, they want to ask about us. And then other times we're kind of promoting the program to our database, right? When it comes to CMHC MLI Select, if you're looking to learn about the program, it's going to feel like a lot. But with us right now at this stage, we're really good at streamlining it and making it easy for people. If you're saying, hey, I'm interested in this type of investment, here's the pillars of the program you want to use, here's how you approach it, here are the best types of deals. Like, we're really good at kind of guiding the investors from that vantage point. There's no point in like learning about all the different stuff involved in the program if it's just really not going to matter for your investment strategy specifically. Some markets are going to work well for the affordability component. Some markets are going to work well for energy efficiency. Some types of buildings work with accessibility. Other types are a non-starter. So you just got to kind of know what you're interested in, and then we'll just tell you how to maximize the program and get the best cost benefit.
Yeah, I like that. So you're basically a giant filter for this massive program that has a ton of power for people, but it's overwhelming. So they
Yeah, exactly. Like, I had a client reach out to me the other day. They're like, hey, I heard about this CMHC program. We have 2 lots in Toronto. We want to build a 4-plex with a detached ADU for 5 units. And I can say, hey, yep, we finance a ton of those. Here's exactly how the permit approval goes. Because the permit approval is like this, you actually need to take this type of construction loan, and then we refinance into the MLI Select program after. And when you do that, this is the pillar of the program you're going to use, because that has the best cost benefit. And then it's just like really easy for people, as opposed to if you're new to it and you're trying to figure it out and you're listening to them on what they want, you could just be the blind leading the blind, and you just end up in the abyss of like a deal that's never going to fund.
Yeah, you got to take the lead with those type of deals, eh? And are you explaining that over the phone on a discovery call, or do you guys have like some sort of video or resource you give them to walk them through that?
So with CMHC, there's different versions of onboarding. I think the best way to onboard someone who's brand new is we do a Zoom. We go through like the PDFs of the program and go through everything at a high level with them. And then from there, what I do is we have a document onboarding that's required for every deal. And then from there, it's like, if you're willing to do the onboarding with the documents, I'll analyze any opportunity you want to look at.
Because they're serious.
Yeah, if you send me 10 apartment buildings, I'll analyze all of them and tell you the best way to approach it. Hey, this one I would buy directly with CMHC. This one I would buy with this type of loan type, try to get 40% of the units to market rent and then refinance at this valuation. Here's how all the numbers shake out.
Gotcha.
But, really we're just looking for people to, right, make a little bit of a commitment so I can go a little bit deeper with you and give you even more value. So
that's a good call, because you're putting a lot of upfront work before you get paid. And that's why you're paid the big bucks on the commercial side, because you've got a lot more steps involved before you actually fund the deal. So having that commitment is super key from that client before you do anything, really.
Yeah. And the client life cycle, it's a lot longer, right? Like 1 year is a very normal client life cycle for a lot of these things. It's not as good on like the renewal side, I would say, kind of thing. Like if you're looking to move somebody on a renewal, like you're going to have to throw a fee in there, right? So unless they're doing an equity takeout or something like that, renewal is not really a big thing. But in terms of just like the purchase and refinances, there's a lot of opportunity, and you'd be blown away just how many people are sitting on 20, 30, 40 unit apartment buildings with like no mortgage on them. It's crazy how much like equity there is sleeping in the commercial market right now. But on the other side too, sometimes you have a lot of people where it's just like there is no bank who will do their deal because people were borrowing at really low interest rates a couple of years ago, and now just those valuations aren't there, kind of thing.
Yeah, it's wild. Whole different world.
Yeah.
So what's next for Synergy? We kind of touched on a little bit, but what's next in your plans there?
I think what's next really is just continue to work on growing our own book of business as much as possible, because the more we learn, it's the more we can pass down to the agents, right? You use a specific CRM and really get the most out of that CRM. That's something you can pass down to your agents, right? Building the right automations, experimenting with Facebook, Google ads. Like really, it's just how much can we push what is already a very big database to find like best practices to drip down to our agents. And then we'll continue to grow our agent team, as it goes, but we're not going to be crazy aggressive in that space. We just kind of work with people who reach out right now, but mainly it's just grow my commercial book as much as possible, keep growing the real estate portfolio. And I don't plan on going anywhere. I mean, it's a fun industry. I'm having a blast. I still love taking opening calls. I still like when a client's trying to leave me for another bank and the strategy of pulling them back over. Like I still enjoy all that stuff. So I don't really plan on
Good for you, man. That I definitely do not enjoy that.
I'm sure it beats the pants off that 200K salary job you were
Oh,
you were
100%.
tempted. Yeah.
Well, that's the other thing too, right? Like with how expensive Canada is, and especially here in Ontario, like I can't slow down on the mortgage book at all. I mean, come on, you got to make a lot of money just to be able to breathe here in Canada.
You're preaching to the choir, man. I've been saying that forever to people. Like, yeah, that's a whole other topic. But if you had to like give someone advice to someone that was looking to get into the real estate investing niche, would you have them go through the same path you did, or would you slightly tweak that or go a completely different direction to build that book?
I think that if you want to get in the real estate investing niche, I think step one is you got to pick up probably at least 3 properties. At least 3 properties.
I like that.
Give you some legitimacy. If you have 0 rental properties, or you have, 1 rental property and it's just you live there with a basement suite and you're really trying to max yourself out on that niche, it's going to come across not authentic. Right.
Yeah.
And I think the biggest thing I try to teach some of the new agents is that like people always say, go network, go do this. Sometimes I think networking actually hurts you. If you don't know what the fuck you're talking about, you're actually going to hurt your reputation and hurt your ability to get leads by going and networking. I don't want you out networking, saying you know all this stuff. Someone asks you one question, you don't have the response, and now all of a sudden your credibility is completely out the window. Right. So whatever niche you want to go into, just make sure it's true to you. Make sure you actually have experience with it. And when it comes to marketing and stuff like that, just market it the way you think you would want to be marketed to. The biggest mistake I see people doing is that they're all following the same mortgage coaching. So they'll go do a mortgage coaching course and they'll post a Facebook status or send out an email blast and it says, hey, who is the real estate agent you used in your last time you bought a house? And I'm like, it's funny. I saw 27 mortgage agents posting that. You all look like ChatGPT, right? Like just come up with your own authentic stuff. And if you can't come up with your own marketing, then there's another problem here. It's, do you not know enough about the business? Because for me, all my marketing comes from questions I get on the phone. What question is constantly recurring in the client cycle? So sometimes, you'll have a question come up in your client journey. So then you adjust your process so that question is answered before someone even asks it, right? But if you're noticing like clients on the phone are constantly saying, hey, how long do I have to wait before I can refinance, right? Then that's a social media video. Hey, I know a lot of people have a misconception that you have to wait 1 year before you can refinance your property. Did you know that after 6 months, we have many lenders who are willing to let you do a full equity take? Like, what are the questions you're being asked? And that should be your marketing.
Yeah, I love the honesty there, man, because like you probably hear from a lot of other people like, oh, you know what, like you don't need rental properties to get into it. Like as long as you understand fundamentally how to structure a deal, like you're fine. I agree with your statement. Like I feel like you have to walk the talk and have rental properties because then you're not going to be able to put yourself in their shoes, your clients, when they're going through acquiring a property or having issues with a tenant, that sort of stuff. It's the real experience that I think you need. And you hit the nail on the head with that.
Or if you don't have any properties, you need to be transparent about that, right? Like, I'm consuming everyone's content all the time, and the stuff I see all the time, I'm just like rolling my eyes. There's people who are promoting MLI Select. They own no properties. They've never funded MLI Select. They don't know anything about MLI Select. That's quite dangerous. Like if you're doing something for the purpose of getting commission, it shows very quickly, right? So I think like, it's like, hey, I don't own any investment properties, but I work with a majority of investors, and here's how I help them scale their portfolios. That's a way more effective message than trying to act like you're something, and it kind of gets unraveled that that's not quite the case. And now all of a sudden, I have a bad feeling in my stomach about you.
Yeah, the fake it till you make it does give off that commission breath of this person just being horny for the paycheck. And that's a big thing that we're trying to push getting away from. So I really like that advice there. The other piece too is we touched on this was selling through emotion instead of logic, making that sale, being able to say, hey, I have 100 plus doors. This is my experience. I've dealt with a shitty tenant. This is what I did. And like, I understand how you're feeling right now. It's going to appeal to the client so much more than being like, well, I Googled how to deal with a bad tenant and it's been a shitty answer.
ChatGPT.
Yeah, exactly. So yeah, 100%. I think you hit the nail on the head there.
Yeah, I've even had that experience too, like helping clients. I've got 3 rental properties, but I myself would never dive into that niche and be that guy because I know I don't have that experience. But helping someone buy their first rental property, I'm 100% comfortable with that because I have that experience and I've felt that. Even on the phone calls, like I could feel myself being more confident speaking to that client because I've been in their shoes. And same thing like being a business owner, you're working with entrepreneurs, like you are a business owner and it's a lot easier. So maybe there is no hard cut rule there, but I think like what you said is very relevant.
Yeah, absolutely. And again, like there's endless opportunity in this space. I think we all know 3-4 amazing strategies to generate leads that we don't have time, energy, or effort to actually pursue, right? Like I still don't see someone dominating the reverse mortgage space, which is probably one of the biggest spaces that is out there right now for somebody to dominate. There's endless opportunity for anyone who wants to make a lot of money in this business. It's just put your head down, be the one to kind of, create that lane, and there'll be a lot of opportunity for you.
But do we need that person who's 55 plus who has done a reverse mortgage to be selling these reverse mortgages?
That's the thing, but I don't know. I don't know if that's true. I've toyed with that in my head because I want to dive into that at some point in my life. I would love that niche, man. I've always
I'm just surprised that you don't have all these boomers reverse mortgaging their house to buy condos in Florida and just living a good life. Like, I mean, at the end of the day, it's like there's like a fantasy with giving some kind of inheritance to your kids and all that kind of stuff, right? And that's what kind of holds people back from doing the reverse mortgages. But yeah, no, you probably need the right demographic marketing that. So
I will say there is one guy, I'm not going to name him. He's absolutely crushing it in that space. But what he does, it's all faceless videos on YouTube and social media. And he has a blog. He doesn't show his face anywhere. I know he's on the younger side. He's like maybe late 30s and his 40s. So that could be the reason why he's doing it. But he absolutely crushes it with reverses. And that's all he does.
Yeah, well, they're the easiest mortgages to do, basically, too. So, yeah, it's a good win.
He doesn't even do them. He just hands them off to like Chip and Equitable, maybe. Maybe they all do them, but you just hand off the lead and they just complete the file. It's like he doesn't even touch it. He just hands it off. It's nuts. Yeah. Gets paid 100 basis points. Yeah.
Amazing.
If I get a couple more grays in my beard, I'm just going to put one of those AI photos.
Just Fred Durst it. Just dye your facial hair gray and you're good to go.
Yeah, there we go. Well, Jacob, thanks for jumping on today. It gave us a lot to think about. And I think for the listeners, especially those curious about diving into the investing niche or going commercial, you've definitely given them some stuff to talk about. And I'm sure they'll be reaching out to you with questions. So really appreciate you coming on and sharing your time with us and look forward to chatting with you again soon.
Thanks for having me, guys.